Hey everyone, this is Josh here with Invest with Meh. Just wanted to do a real quick rundown, just discussing Robinhood and potential. This is a video I've been wanting to do for a few weeks now, but potential S&P 500 inclusion and what it could mean coming up here in March when the rebalancing happens for Q1. So this will probably be, I'll try to keep this under 10 minutes because I don't have a lot of time today. So we'll just get into it here. So first, I just want to walk you through, what it takes to be included in the S&P 500. I know a lot of you probably are already aware of this, especially those who took the ride with Palantir through inclusion. So you kind of know what the milestones are for being qualified. But I'll break it down for you just real quick. First, the market capitalization needs to be at least 14.5 billion. It used to be 13, but they've bumped it up because so many companies now are, we got $1 trillion market cap companies, so they've made the requirements a little bit higher. Hood's market cap right now is around 55, 56 billion, I think. We'll talk about why that's important later also. Share float has to be at least 10% of outstanding shares, which they're way over that criteria. It must be US based, so they are based out of the US, which is nice. Must be listed on the NYSE, the NASDAQ, or CBOE. It's listed on NASDAQ, so they're qualified there. Number 5, most recent quarter and the sum of the last 4 quarters, you must have positive GAAP earnings, which they have for a while now, since I think the start of 2024 Q1. And so that's good, and they've continued to show growth, and I think this last quarter will help because the 500 inclusion committee, they look for increasing track. They were looking at the track record, and Hoods it's not like they just got to positive. They've been positive for over a year now, and it looks like they're going to just continue to ramp up their earnings. I mean, next quarter should be another strong quarter after having a record quarter in Q4. So the narrative is good for them right now. The optics are really good for the committee when they go to make the vote. And then adequate liquidity and a reasonable share price. It meets the trading volume requirements, and the share price is very reasonable. So they do meet this criteria at the moment. With the market cap now over 50 billion, I will talk briefly about why this is important. Usually that was the main barrier for a lot of companies, and still is just getting that market cap above that. But once you're over 50, you get into a pretty small group, like Coinbase, App11, I think, is in there too, where you're a really high market cap and you're also not in this S&P 500. There's just not many companies that are that big that aren't already included. They usually only include, like, at most they'll switch out like 3 at a time. So it's pretty competitive right now. There are a lot of good companies that meet this requirement. There are even fewer that meet this requirement that have over a 50 billion market cap. So the odds of Hood getting in, I feel like it's at minimum 50-50. I think they should be in just because of the sector they fit into. There's not really good fintech in the S&P 500, so I think it would be and I think they deserve to get in over Coinbase because Coinbase is just so one-dimensional with only having crypto holdings, whereas Hood, they have a bunch of different verticals, all of which are growing, greater than 30% quarter over quarter. So I think they're better qualified to represent the fintech space than Coinbase is. Let's see here. I think I had something else too I wanted to go over, kind of related to this. Oh yeah. So the main thing that I really wanted to get into, I have it on my phone here where I was typing it up earlier. I think it's unique to Robinhood is the percentage of institutional ownership. Institutions already own 81% of Robinhood. Insiders own roughly around 1%, and retail is 17.9%. So more or less 18%. Just to go through the list here, the top institutional owners, you'll recognize all of them, which I think is a good thing. And these aren't a bunch of random institutions that are holding Robinhood and have large stakes. So number one, top in the list is Vanguard Group. They have 7.72% of the stake. Next, you have BlackRock, 4.1. Ribbit Management Company, 4.1. Galileo is 3.05. The rest of these, I don't know that you would recognize. JP Morgan Chase is 2.21%. So there's a lot of big boys that hold a pretty large chunk. I think ARK, which is not really an institution, they hold like 5% across all their ETFs of Hood. And that's the next thing I wanted to talk about. And the last point I wanted to make, which I think, just the setup for how a large percentage of this is already institutional owned. So if Hood does get into the SP 500 coming up here in March, not only would that just continue the storyline and the hype around it that has been building and continues to build, it'll be right around their earnings too for Q2, which would, be a good look to have that inclusion right before their Q1 2025 earnings, which I think are going to be on par. Maybe my estimates right now, they're about 8% higher than Q4. This is just based off of what they've shared with us, and then the crypto that I've been tracking, their crypto notional volumes. I can get a pretty good estimate on what the revenues will be there for that. If you want to check that out, just look at my X page for it. So, Palantir, who was included, their institutional ownership is only around 50%, whereas his is around 80%. And I make this point because once a stock gets included in the S&P 500, it forces a lot of ETFs to buy. Any ETF that tracks the S&P 500, so SPY, VU, IVV, they must buy to match whatever percentage there is in the index. Many institutional investors have S&P 500 mandates for tracking particular stocks that are within them. Mutual funds have benchmarks, and so they want to keep up too with the S&P 500. So to minimize their exposure of possibly not keeping up with the 500, they add a lot of the same stocks that are in the 500. So it'll track along with it without them having to do too much extra work to meet that goal of at least being, in line with the S&P 500. Otherwise, why are people even, paying you to manage their funds? Not forced, but often by. This would include like actively managed funds. Same thing as mutual funds. They want to stay competitive with the S&P, so they're going to buy because the S&P ETFs and the S&P themselves are buying and including it in their portfolio. Smart beta ETFs that use the S&P 500. Institutional investors who use the 500 as their investment universe don't strictly track it, but they'll keep it in there probably just to be close or to have some exposure to it, since the S&P does. Buying pressure for these types of events, and you saw it with Palantir, it usually comes in phases. Investors, especially retail, will front run the inclusion. We saw it with App last inclusion. Their stock price ran up the day of S&P inclusion like 5%, and then in after hours when they didn't get included, like it all got wiped out, and then another 10% got wiped out the next day because so many people were front running thinking that they were going to get in. Then pre-inclusion index funds generally build positions, gradually build positions, because they don't want to wait, because if they wait, then they're getting in when everybody else is trying to rush in. And then post-inclusion, there's continued buying from slower moving funds and active managers who just weren't keeping up, with them getting in. And then, of course, inclusion day itself, you get major rebalancing as funds have to weight their indexes to match. And that's where you'll get like the SPY and VU on that day will reweight to match the ETF. So you get a lot of buying pressure. And that just adds to the FOMO, especially if they have another good Q4 coming up right in the next month or within the month of that happening, or not Q4, Q1, if it's as good as Q4 was, which I think it will be. You could really see the stock push higher. Looking at the Vanna levels, which I showed a few days ago, that hasn't really changed much, but March and April dates, the monthly expiries, you're seeing 75 is like a really big Vanna level, positive Vanna level. So a lot of people were positioning up there thinking this is going to go much higher than it is right now, and I tend to agree. And to tie it all together, the fact, I was pointing out the institutional ownership for a reason, because retail, while 20% is nothing, to sniff at, institutions already hold 80% of the shares for Robinhood. So who are these ETFs going to buy from? Who's the S&P going to get their shares from? Who are these active fund managers going to buy their shares from? Because institutions aren't just going to give up all of their shares in a company that just got included in the S&P 500. And I think retail has been in this long enough, much like it was with Palantir, where people who had large percentages of the holdings for the retail stocks that were in circulation or in the float had it at very low prices. Robinhood, I would think if you look at the volume over the last 3 years, the point of control, which is like where most of the buying was happening, was sub $20. So these people also, when inclusion happens, they really have no reason to sell. Like they're not going to sell into strength just because of the inclusion date. And it's the same with, because they don't have to. Their cost basis is so much lower than where the stock price is. There's just not much incentive for them to sell unless they need it, unless they need the money for some other life reason. And institutions too. Like I said, they own 80% of the stock. And if it gets included, they're not just going to give up their shares. So I think you could see something like with Palantir where it just keeps like squeezing higher, because major index funds are going to have to buy at higher prices to balance to meet the tracking for the S&P 500. And I think actively managed ETFs, mutual funds, just any of the corporate entities that want to keep pace with S&P 500 are going to buy too. And I think all of this buying is going to just push it higher, because they'll be forced to buy at higher prices, because the stock's going to be locked up by institutions and retail traders who have a very low cost basis. So that's just my 2 cents. That's all I really had to say. It's something I've been thinking about for a while because I've been paying attention to their institutional ownership. And it's just something to think about when that day comes. And, if it doesn't happen in March, there might be a sell-off, and that'll just be a really good chance to buy, because I do think one of these quarters this year they get included, and it doesn't really matter when. This will happen. Like there will be significant buying pressure, and I don't think there's going to be many sellers. So, I've been saying Hood 100 for a while now, and I think it'll continue to trend that way. Well, I almost made it. 14 minutes. Close. All right. Well, y'all have a good afternoon. I'll talk at you later. Peace.